Hello, good morning, everyone. Welcome to our morning market update and live trading session here for Tuesday, December 12th of 2017. This is George Papazov. I got an exciting webinar planned for you today. I can't do my patented chair spin because there's no chair to spin here. I'm in a different office today. Sometimes you just got to get out of your comfort zone. Sometimes as a trader, you're at home and you're there all day and you decide, you know what, it's time to get out there and do something different. It's time to go see a different space, different environment. So I packed my stuff and I rented a place for the day, and I'm going to trade out of here. And why not? I got a nice view out here of downtown Toronto. You can see kind of the snow. Oh, the camera's bouncing. I can't touch the desk. You can see the snow in the background. It's really nice. It's beautiful. It's a romantic scene, and I'm doing some romance by myself. This morning, we're going to talk about a few things, including what we're going to actually cover tonight. Tonight, we have a webinar or elite group coaching. So our elite members who subscribe to the bundle have once a month group coaching session. And today, I'm going to sit down with them. We're going to work as a group. It's kind of like a working environment where I'll show them how to set up their software, the topic of this month. I can actually go in and work with them one-on-one to set their software up. So if you want to join, sign up for the Elite subscription. It's a really powerful package, and it comes with the group coaching component on a continuous basis, which is very, very important. That group coaching is essentially what people ask for, what a team asks for, and I deliver that content to them. So it's very adaptive to what's needed within a group environment. All right, let's get started with today's morning market update. In Asia and Japan, right now it's down 1/3 of a percentage point. Hong Kong's down 0.6%. China's down 1.3%, and India's down 0.7% as well. All right, so weakness here in the Asian session. There's a little bit of selling early on. Cryptocurrencies are down. At one point, they were down a fair bit. The premium between the futures and the spot market is starting to narrow, and that's telling you that traders are starting to do a little bit of arbitrage here on the CBOE, Chicago Board Options Exchange. That's the exchange that they're listed on first and foremost under the CFE data feed, and then they're listed on December 17th on the Chicago Mercantile Exchange under the CME ticker symbol BTC. So we're really excited to trade that product. The CBOE Bitcoin futures have kind of been a little bit of a bust, but even they're starting to narrow down the premium, which is telling you you're getting some institutional interest in here. You're getting some arbitrage taking place. And arbitrage is not a correct word. You can't really arbitrage the futures on Bitcoin because Bitcoin's not a physical product. Arbitrage occurs when you buy an asset and sell the future, or vice versa, to create an arb where the two converge and you make a guaranteed profit because you have the underlying asset. That's not how Bitcoin works. Anywho, Asia's weak. Europe here, midday London's up 0.2%. Paris is up 0.3%. Frankfurt's up 1/10 of a percentage point. And that a little bit of strength here early on in Europe is due to some really good numbers out of the Bank of England. So I'll go into that before I go into the United States. The Bank of England here in UK, Mark Carney's got a pretty difficult job to do here on Thursday. It just got complicated because they have a monetary policy report, which is the equivalent of the Federal Reserve for the US, but out of the UK and Europe. All right. So what happened today is we had a 3.1% reading in inflation for November. That's a pretty strong inflationary data point, and the pound just absolutely soared. That's the strongest inflation since March of 2012. All right. So on that news, equities rallied, the currencies rallied as well, and that's why Europe is a little bit stronger. Absent that inflation release, I don't know the markets would have been this high today, or it would have even been positive at all because Asia started out weak. So what I'm trying to tell you here is, in the early open session, be careful. I'm sensing a kind of bearish undertone. It's starting to grip the market. Pay attention to the open in very particular attention, or pay very particular attention to the open. I can't speak. I need some coffee. Thank goodness it's handy. I don't know what this says, by the way. A lot of times people will do like product plugs and placements. That's not me. It's not going to be like, need some coffee. Sponsored by. That they're not paying me. They should now, though. All right, I got distracted. Futures here, in the United States, Dow Jones up 1/10 of a percentage point. S&P 500 flat, no gains. Nasdaq's flat as well, so pretty much flat markets across the boards at the start. The U.S. except crude oil. Crude oil is a little bit strong with some refinery issues that we'll talk about in the subscriber room. Price is up to 58.33. Gold's down 1/10 of a percentage point. Gold continues to be weak. I've been talking about this for the last 2 weeks. Get out of the way. Gold's going to drop. It's time to sell rallies and flip bearish on gold until the end of December. In January, the bullishness starts to resume a little bit. But until the end of the month, you have no business owning gold. Be careful. I mean, you could own it for the long term, but don't be trading it from the long side for the short term. Bitcoin is up 0.6% as well. 6/10 treasury yields are flat. This morning out of the United States, at 8:30, we had the producer price index, and that was a really important release, the PPI, as they call it. And basically, this is an inflationary reading from a production standpoint. It's not as important as a CPI to give you a cue of inflation, but it's important. It came out at 8:30 in the morning at 0.4%. All right, the expectation was 0.3 on a month-to-month basis, and the annualized pace is 3.1%. So 3.1% versus 2.9. So we're getting a little bit of an uptick here in producer price index, which is a little inflationary, which helps the Federal Reserve and their conquest to hike interest rates, which we're going to talk about in a moment. Federal Reserve is the next topic. All right. So excluding food and energy, you also have to know that number. That's a very important number month to month. That's also up. Why is that important? Food and energy are the two most volatile groups when you're measuring inflation, especially energy prices. I mean, if you just look at energy alone the last couple months, oil prices have skyrocketed. Energy's lifted a lot of prices on consumers. But obviously, the two things that influence inflation the most are not counted because economists think that's a great idea. So upvote economists who think that's a great idea. All right, so if you're an economist, sorry, I'm not trying to rub you the wrong way. I'm just saying economics changed since 2009. Most economists that I know agree with that. Like, I don't know how to actually do economics anymore. My degree was rendered worthless in 2009 with that big stimulus TARP package that came out of the Fed. All right, we talked about that. PPI came out slightly stronger, giving a little bit of bullishness to the market here, a little bit of life. It rallied a little bit. S&P 500. What's it doing right now? Let's see. It's kind of holding that range. 65 even closed in last night's trading. Globex opened slightly more bullish, but I mean, we're sitting in a 2-point range on some pretty weak volumes overnight as contracts roll forward from December to March. So in the next couple of days, we got the rollover period. So be cautious. This is when December futures start to expire and traders are selling their December contracts and buying the March. It's called a roll. So with these rolls, you're basically getting 100% turnover of most positions. If you're holding long, you're going to be forced to liquidate your December contract and roll it into the March. So sell December, buy March. A lot of those orders are already in the book, and a lot of the clients have auto-rolled, but some of them still remain. So be careful there. That caused a lot of volatility, especially when it's a year-end contract like December. Why? Because, I mean, funds have to close the book on the year. Just like you have to close your book, I got to close my book, funds have to as well. All right, so let's go into FOMC because it's a pretty important topic. Today, the meeting starts. It's a 2-day FOMC meeting session, and today is the first of two. The second day is tomorrow, obviously, and tomorrow's the key one. Today, all Federal Reserve voting members and the board is meeting together to deliberate whether or not there's going to be a hike and make a final decision. Tomorrow, they announce it at 2 p.m. Eastern. All right, so if they raise it by a quarter point on Wednesday, that's going to be the fourth raise of the year. So they've pretty much stuck to their tone, and they've raised rates at every opportunity they've had. Janet Yellen was flat out clear and she said, I'm going to be hawkish at the beginning of the year meeting. She's going to start raising interest rates. She did it. She didn't have inflation. A lot of her top critics say, why is the Fed raising interest rates when there's no inflationary pressure? But the labor market's doing well, she points out to, and she says inflation's transitory, which means it's basically in a transition. It's just moving from a weak to a high environment. I don't believe it's transitory. I'm going to tell it. I say it like it is. That's why some of you guys are here. I guess not all, but most should be here because I say it like it is. It's not about inflation. It's not about jobs. It's about the market. If the stock market continues to rally, they're going to continue to raise. That's as simple as their philosophy is. I know a lot of traders are wondering and stuck and scratching their head. Why this? Why that? That's why, because the market's going up and it can sustain it. So we pretty much have almost 100% chance built in for tomorrow's rate hike. I think it's like 98.2. So we're hiking rates tomorrow. The big question right now that traders are watching for in tomorrow's meeting, and we'll cover this in a little bit more detail of how to actually trade the Fed announcement tomorrow. But the big thing we're looking for is in the Q&A. At 2 p.m., they're going to announce the interest rate. We believe it's going to be a hike. As soon as that's announced, the U.S. dollar is probably going to bid. It's going to get a little bit firmer. S&P 500 futures will also get slightly a little bit firmer. Gold is going to dump. So gold's going to be bearish this announcement. That'll be the initial reaction, we believe. And then moving forward in the question and answer period, this is what traders are wondering about. How will the Federal Reserve react to this new tax legislation? What will they say about it? What will their economic outlook be, including this tax proposal that's now pretty much going to become a bill, and it's going to become law and legislation very soon. So that's going to be the first question. Second question is there any kind of updates on Jay Powell, what that transition is going to look like? But more importantly, how will you raise interest rates in 2018? That's called the dot plot. What will the curve or trajectory of interest rate hikes be? Is it different than it is now? All right, this is a complex announcement. It's not, unfortunately, hike rates, do this. It's not binary. It's not 0-1. You have to think. You got to think through these things as a trader and ask yourself, how is what we just found out different in comparison to what was expected? Not what was and what is, but what was expected, and how is that any different? And that's how you start to get some really powerful trading opportunities for the Federal Reserve. So 2 p.m. announcement tomorrow, 2:30 p.m. announcement. Q&A tomorrow for the Federal Reserve. Today, we don't really have too much more. We got Red Book chain store sales. It's already out. 1 p.m., we have a 12 billion 30-year note auction. There's no, I'm just getting a squawk. The 40s pipeline is the one that shut down. We'll talk about that in the subscriber room. Speaking of which, we should probably get to it now. We have a couple minutes here. So yeah, if you guys want to check out the webinar tonight, it's at 8 p.m. Eastern. You have to be an Elite Pro or an Elite subscriber. If you go to TradeProAcademy.com, you can find out what the benefits are there, but they're vast. I can't go over it in a few minutes. It's a massive benefit. It's a massive tool to traders that I think hands down is the best education for trading on the planet. All right, that's all I'm going to say. That's all I need to say. You guys check it out. It comes with a 14-day money-back guarantee. You make your own decision. I can't tell you what's right for you, but I can tell you where to look. And this is it. All right, guys, see you in our trading room. Have yourselves a wonderful day. Good luck. Good trading. Manage your risk. Like, comment, share, subscribe. We got a lot of great content coming at your way, including Saturday and Sunday videos that are focused a little bit more on trading strategies. Monday to Friday, we do our morning market updates. Hope you enjoyed this piece. You guys have a great day. I'll catch up with you tomorrow morning at 9 a.m. All the best. Trade careful. Trade like a trade pro. All right. Take care.